Yes, we can, Kenneth Onwara, as the facilitator for today's webinar. Thank you. Yes, we can, Onwara, please.
Thank you very much. Thank you very much, Kamaruddin. Thank you, everyone. Thanks, Real Academy, for making it worthy for me to be here. I thank the president and every other member that is here. I'll quickly start. Yes, my name is Kenneth Onwara, Head of Practice, Kenneth Onwara Consulting. I'll be discussing market comparison. We're actually going to be sharing knowledge. I'll talk and I'll still hear from you all. I'll be discussing market comparison, method of valuation, and adjusting for comparability. In the course of this course, we will be describing the comparable market comparison method of valuation. We'll be able to know when to choose the market comparison method of valuation. We'll probably be looking at factors that we need to, factors and elements that we need to adjust during the adjustment. We will equally identify and discuss the adjustment elements. And we will also show procedural manner in which valuers should be able to perform all the adjustments. So market comparison, the description, market comparison is a method of valuation under the market approach. What the market comparison does is to utilize information on transactions that have been done in recent times on same or similar assets. And that's what we provided with an indication of value. So what that means is when you're using the market comparison method of valuation, you're not looking for a property, you're not comparing a property, for instance, in Maitama and property in Gariki, or even in some situations, the streets shouldn't be too far from themselves. So for you to be able to do a proper comparison, make sure the properties are similar, the time of sale is not too far away, and there is arm's length negotiation. So to qualify as comparable property, the property, as I said earlier, must resemble the subject property in size, in shape, design, utility, and then location as well. It should have been sold within the period of your valuation, 6 months, under 1 year, and there should have been arm's length negotiation. Of course, you won't be working with a comparable where a mother is selling property to the daughter, or where a very close friend is selling property to his friend, or in a situation where you have a special purchaser. So these are things for you to look at when you're checking and picking your comparable properties. So when choosing the market comparison method of evaluation, to choose transactions to compare within the following context. It has to be properties in a location where there are several transactions. It's not just okay to pick just a single transaction, because a single transaction will not give you that comparable. There must have been several transactions that you're comparing. So what we usually say and suggest and encourage our practitioners is make sure what you're comparing will be from a minimum of 3 properties. And there has to be evidence of transaction of very similar assets. They have to be identical. You should not begin to compare a 2-bedroom flat with, for instance, a 4-bedroom terrace house. They are not similar in any way. And you have to pick properties, you have to compare properties that are very similar. That will be what will give you the proper indication of value. Next context is you need to take something that is closer to the valuation date, not a property that has been sold in a long time, for you to have a proper comparable, if you're valuing a property today, for instance, ensure that you have comparables that are not more than 1 year from now. If you're able to get comparables within 6 months or 8 months, that will be okay, provided you're able to do your proper adjustments. Arm's length transactions. Like I said earlier, when your comparable are properties where there is a special purchaser, then you will be having some errors in when you arrive at value. So as much as possible, let it be property that has been exposed in the market, property that people have seen and there have been marketing enough, there have been negotiations, not that which it comes out today, you call 1 or 2 friends and they buy, and likely buy above market rate. Another context is having sufficient information on the transaction. You must be able to have comparables where you have sufficient information on the transaction. If you're having a comparable where you do not have information on this property, if you're having a comparable that appears that maybe have a swimming pool and you're not aware it has a swimming pool, or has a lift and you're not aware it has a lift, or has a number of rooms that you're not sure of, if you use that as comparable without have sufficient information, then you have a problem. What we equally advise practitioners is when there are comparables, ensure you visit. Go carry out an inspection. But what that means, all of these still boils down to you having proper data. Have data of properties that are sold. Whenever they are sold, have the information. Likely they are going to be sold by your colleagues or other realtors. So take down this information, take down the number of rooms, take down the size of the space, take down whatever you have there and store them so that you'll be able to use them in another time. Furthermore, you should be able to have a reliable and trusted source in getting this your information on comparable transaction. If the transaction, the information is not, you're not sure of the information, like all these things I mentioned, if somebody had given you, oh, I sold this property at X naira, and the person is not even sure of the information he has given to you, you must not use that as comparable. So always ensure that whoever that you are dealing with or giving you this information on comparables must be people you are trusting their information. Work with actual transactions, properties that are actually being sold. Work with information, not the ones, work with actual transactions, not properties that are up in the market for sale. In a situation where you do not have properties that are already transacted on and there are properties in the market, there are some other ways, competent, and you just use your skills to get information from whoever is selling. There are questions like, what best price have you got on this property, even if it's not been sold? How long has it been on the market? All of these are what will guide you in knowing if that property is something you can use as comparable. You should be able to get information on the best price the person has got, and you can even make an offer. In certain situations, you can even act as a buyer. Call up the person that you want to buy, make an offer, talk with the person extensively. That will be able to guide you on the actual amount that property will likely sell. Next is the steps in using market comparison method of valuation. There are key steps that you should use in the comparable transaction method. One of them is understanding the asset being valued and its relevant valuation drivers. If you're valuing a 4 or 5 bedrooms or a 5-bedroom detached house in a certain neighborhood, you should be able to understand everything around that property. If you do not have adequate information, if you don't understand the assets, then you will have issue. In Abuja, for instance, my Abuja peeps, you are here, and Abuja, for instance, the shape of the land, even if the land is 2,000 square meters and you have another 2,000 square meters, the shape of the land will have, if the shape is bad, like we've seen, like very sharp triangular plot of land, you've seen very sharp rectangular plot of land. If the shape of the land is not even regular, and you do not know this, and you're comparing this, and you're using this as comparable, you may have issues. Because what we have come to realize, and I'm sure in other states, those things are there as well. What we have come to realize is that the demand for people in certain neighborhoods, from investors in certain neighborhoods in Kuzapia and some other locations, for instance, to build a certain kind of accommodation or certain kind of property requires regular shaped land. So by the time the demand for the regular shaped land gives rise to higher value compared to the irregular shaped land, and you begin to use them as comparable, you're going to have issues. So as much as possible, understand the asset being valued, note the number of bedrooms, know what it has inside, know if it's, just have all the information that the asset has, know the titling it has, know if there's any issue, know if there's any court matter. So these are all the things you require, so that, and there are plots here and properties that you hear, they call, oh, this is a problem property, but some people will still buy such property. They may buy them at distressed figure. So you try as much as possible to have all your information, so you don't use some of those properties as comparable. When you have adequate information and understand the asset very well, you not use them as comparable. And if you equally have adequate information on the asset you're valuing, then you know what to use as your parameter. Step 2, identify the unit of comparison. So now, having understood the property you're going to value, you're now going to identify the comparison or a set of potential comparable properties. So what you're now going to be looking at is the property that will match or close to the ones you're going to value. So you use them as comparable. So you'll be looking at property that should trade in a liquid market. Liquid market is a vibrant market where there is steady buying and selling. You should equally look for comparables that are in a place where properties are sold frequently, not the one-off sale, because just one property will not be able to give you the adequate parameters you need for comparable. You should equally look for multiple comparables. Don't look for it's not just one comparable that you do. Next is step 3. You need to identify the relevant comparable transaction. Assess the comparability, understand relevant differences, and calculate the key valuation metrics for those transactions. So you will have to choose comparables that are similar to what you're going to value. The number of rooms from 5 bedrooms, okay, say 5 bedrooms, you can get 4 bedrooms, you can use that as comparable. You have to be able to get the dimensions. Are you comparing properties that one is a 2-bedroom and you're comparing with a 4-bedroom? You just have to choose comparables that are really similar in terms of dimensions, in terms of size, in terms of quality of finish, in terms of age of construction, in terms of location, in terms of the transaction, or the way the transaction was made. So these are the things you need to think of and work with. So having done your comparable, now the decision for you to know which of those assets to keep and which of them to remove will now come into play. So by the time you've checked everything on the comparable, you've checked all the parameters, everything surrounding the comparable, you will now know the ones to take and the ones not to take. You may, at the end of the day, have worked with like 6, 7 properties, but by the time you check the ones that closely match the subject property, you may now be left with just 3. So by the time you choose these 3 real comparables, then you work with them. Step 4 is to collect data and perform a consistent comparative analysis of qualitative and quantitative similarities and differences between the comparable assets and the subject assets. Quantitative assets here are factors here. We're talking about the age of the building, the size of the land, the number of rooms. So these are the quantitative factors you're going to be checking. Then qualitative factors of the neighborhood. Is it a quiet neighborhood? Is it in a close? Does it have schools? Some people will prefer, the Muslims will say, does it have a church, a mosque near it? Some will say, is it near the market? So these are all the factors you need to be considering when you're doing using this method of valuation. Step 5 is to make necessary adjustments, if any, to the valuation metrics to reflect the differences between the subject asset and the comparable assets. Because by the time you have identified all the adjustments, you begin to check the differences, all the elements of adjustment, to check the differences and know where and how to adjust as appropriate. Step 7, if multiple valuation metrics were used, then you need to reconcile them. When you reconcile them, you get to have indication of value. Next is analyzing adjustments. The valuer will need to analyze and make adjustments for this method of valuation. There could be differences, and you need to make proper adjustment for these differences. The material characteristics, the age, size, specification, you need to analyze all these adjustments. These are adjustment elements. They have the property, you will check if there are relevant restrictions. For instance, are you comparing a property that you're not allowed to build more than 2 suspended floors? Are you comparing it with the one that you're allowed to build more than 2 suspended floors? So you need to analyze all these adjustments properly so that you won't be caged in. The geographical location or where the asset is located and regulatory environment. Are you in a place, are you analyzing and comparing property where you're not allowed to build a certain kind of accommodation? Are you in a place where you have to build strictly residential, but the other one has commercial purpose on the title document, or the subject property has commercial purpose on the title document, and you're comparing them without having adequate information? You need to know what and what to analyze so you don't analyze wrongly. There are references related to marketability and control characteristics of comparables. So are you checking all of this? Are you analyzing adjustments on property that you cannot sell, that maybe does not have a title document, that does not have the required ROV? For instance, in Abuja, before you conduct any title search, you must have a right of occupancy, not just a certificate of occupancy. So are you analyzing those adjustments? You need to know them. Ownership characteristics. Are you analyzing the property that has issues? Is it a family problem? From a family, does it have a family issues? Are you analyzing a property that you will not be allowed to sell when you want to sell? Are you analyzing with a property that the ownership is in court, is being contested in court? So these are all the analyzing adjustments that we need to have in our mind and note. Further, it is worthy to know the following in adjusting comparables. Some of these things I've mentioned before, I'm saying them again, I'm repeating many of them because these are really the parameters and the core things you need to have in mind. So in adjusting for comparable, it must be an arm's length sale. There must have been negotiation from 2 independent parties, people that do not know themselves as regards the transactions. Friend to friend cannot be used as what you use, or cannot be adopted for your comparable if the property is sold from friend to friend or maybe doing favor. Adjust the sale price of the comparable to account for competitive differences with the subject property. Adding or deducting value. You will need to know the characteristics that the subject accommodation have and the comparables have. Of course, when the subject property is of better finish compared to the comparable properties, your adjustment is going to be positive. If it's deducted, if it's the other way around, then it will be negative. So these are all the things you need to have in the back of your mind. If, for instance, if your comparable has a swimming pool and the other does not have, you need to equalize the difference. The value deducts an amount, say 15 or 10 million naira for the sale price comparable. You need to note that this adjustment reflects the contribution of the swimming pool to market value. It's not necessarily the cost of the swimming pool, and it's not depreciated value. Same thing when you have, like lift and you have mature lawn. So when you are adjusting, just take a certain figure. It's a naira amount, or it could be a percentage, so that at the end of the day, you're bringing it to the level of the subject property. An amount is added on the price of the comparable. What you're intending to achieve is to equalize the subject property's competitive advantage. The principal factors for comparison adjustment are time of sale, location, physical characteristics, and transaction characteristics. Adjustment factors and elements. There are so many adjustment factors and elements. Adjustment factors here are the elements we adjust when we are using the comparison method of valuation. So this list may not be exhaustive, but for you in practice and for you still coming to practice, I'm sure you will have seen a whole lot. So I'll just take these ones one by one. Ownership, interest, and tenure. Some of the elements of adjustment, or one of the elements of is ownership, interest, and tenure. Ensure you know the number of leasehold interest that you still have unexpired. There are some locations, for instance, places in Marina, Lagos, and some places in Kano, where you just have like 5 years unexpired lease term as of today. So these are all the things you need to be sure when you're comparing. So you do not compare with a property that has up to 80 years unexpired term and that of 5 years unexpired term. So you need to check the ownership interest so you'll be able to adjust as appropriate. Title documentation. Does it have a certificate of occupancy? Does the property have a right of occupancy? Does it just have a normal, just allocation letter? These are all the things you need to check because they are elements of adjustments. So when you're comparing with a subject property, the title documentation will enable you to know whether you're adjusting to the negative or adjusting to the positive, so as to equal the value. Date of transaction, you will not be comparing a property that has been sold 10 years ago with that of today. So whatever date is sold, you still need to adjust to the property you're valuing. So it's an adjustment element which you need to check. So when you're getting your comparable, be always there to ask questions like, when was this sale done? What date was it done? So when you try to bring it forward to this date, you'll be able to do a proper valuation without having too many errors. Cash equivalency markup. Of course, with what is going on now, a lot of people have too much cash at their disposal, and some people are cashing in on that. Abuja people, you know what markup is about. I'm sure this is equally done in other states. So it's an adjustment element. If somebody has done a markup on a property, for a property that is ordinarily should be selling for 200, the person sells it for 280, and he clearly has done markup on that property, that becomes an adjustment element. So when you're adjusting for your valuation, you ensure you take out that markup, knowing fully well that it doesn't form it doesn't add to value. So the sale price must be adjusted to account for that premium. Conditions of sale. What is the condition of sale? Is the person desperate as of today in our portfolio alone, we have 3 properties that are owned by politicians that have all put them in the market and they're ready to take amounts below market rate. So when you have such comparables and you're doing valuation and using such comparables, are you taking note of that? Are you getting proper information from whoever has sold that property or whoever is giving you the data on that property? Because when you're able to get all this information properly, you will be able to adjust. So condition of sale is an adjustment element. So you need to look at it while you're doing your comparison, so as to adjust as appropriate. Market conditions. What does the market conditions say? What is the situation?
Hello? Hello? Hello, it appears there's a service error from Kene Honora's end. Okay, we are sorry for that. I think he has a challenge with his network. It's no longer home, but we are trying to do everything possible to bring him back. Okay, while we are trying to bring him back, I want to quickly mention some of our colleagues who just came in when the webinar was going on. I have here ESV Pastor Jagun. ESV Pastor Jagun is the vice chairman of SVABON. You're welcome, sir. Okay. Then we also have our guy ESV Austin Otegulu, ESV Professor Austin Otegulu also joined while the lecture was going on.
Okay, are you there?
Okay, yes, we are here. Sorry.
No,
okay,
it's okay.
welcome back.
I've switched another network. So I think you head up to market conditions, right? Okay, yeah, so market conditions, I talked about it. Then another adjustment element is the location. So wherever the location, okay, I was giving instance with somewhere in Abuja. I was giving instance with somewhere in Abuja where a whole crescent, actually Panama Crescent is the name of the crescent. The whole crescent has a portion that is filled with people that sit out there and fry akara. Then you have another portion that backs the express. Then you have the quieter portion of Panama Crescent. So if you're, and that's Maitama, and that's highbrow Maitama. So if you're in that kind of neighborhood, for instance, you need to do proper adjustments because the request, the demand will be more on the quiet part of Maitama. The demand will be more on the quiet part of Maitama. So that adjustment has to reflect that location, just not because it's Panama Crescent in the same Maitama, you adopt the same. People that will invest in such areas will prefer the quieter part compared to the places where they fire car and compared to the one that backs the express. So these are some of the things we need to note when using when adjusting for location. Then physical characteristics, the quality, the design, the features, the upgrades, and the updates Are you comparing with a property that has been automated? Are you comparing with a property that has a modern design? You see a whole lot of buildings these days with a hidden roof. That's a sort of modern design. So these are things you need to note as well. Economic characteristics. So you need to check all of that. Is equally an element and adjustment. So you need to adjust as appropriate. Land use and zoning. Are you is it a comparable property, residential, and the subject property you're valuing is commercial? Is the property you're valuing zoned for terraces, while the property you're comparing is strictly zoned for single unit home? These are elements you need to look out for. These are things you need to look out for. So that's what comes down to having all the information you need to have. Of course, without information and proper data, you will have a flawed valuation. Non-realty components of value. Has the property you're comparing with been sold with the generator? Has it been sold with automation? Has it been sold with furniture? These are information all you valuers should be able to look out for. So when you're comparing as appropriate. You're not comparing with a property that was sold with other items and comparing them as if it's just land and building. The land area, compare the land area, use the unit price of land and extract and adjust for any difference in the size, shape, and any other feature. Age and condition is an element, so is an element of adjustment, so you need to adjust for that. The home size in all, how many square meters, how many bedrooms, how many toilets, how many bathrooms. These are all the things prospects and clients will want and will ask for even when they're buying property. So you should be able to have all this information and note them when you're adjusting, because they are adjustment elements. Home features and facilities and services. Is that automated accommodation? Take that and adjust as appropriate. The goal of the adjustment process really is just to make the comparable property look more like the subject property. Once you're able to bring them to the state where the subject property or value is, that's when you'll be able to have value that are really free from errors. Many of the things I already mentioned them and already stated them as elements you need to adjust for. So after completing the process of making an adjustment to comparable prices, the result is the market estimate that can be applied. And after that, you get your value. Okay, we have an example here, a very simple example. I will explain them and we'll try to make this as simple as possible so that everyone understands it. Then we will be able to apply it when we have much more adjustment elements. Realtors Prestige Club requires to purchase the 5-bedroom detached house with 2-room servant quarters at number 6 Panama Crescent, Mitama District, Abuja, and has consulted you to advise on the market value of the subject property to enable the club to purchase the property. So the adjustment factors are listed. The sale price is not an adjustment factor, but oh yes, it's one of them. The neighborhood as location, bedroom count and servant quarter count, swimming pool, land size, whether it has your ROO or any other title document, quality of construction and finish. So those are listed adjustment elements. Then the first column is subject property. The subject property does not have any sale. You're not adjusting anything on the subject property at all. It's the adjustment from the other property that will count and give you the Naira count and the market value you're looking for. Comparable A was sold for 500 million. It's assumed that all these comparables that were used here have been sold within the past 6, 7, 8 months. So comparable A was sold for 500 million. Panama Crescent, not too far from the subject property. It has a 5 bedrooms with 2 rooms BQ. Does it have a swimming pool? Yes. Subject property has a swimming pool and it's equally 5 rooms with 2 rooms BQ. What is the land size? 1,300 square meters. The subject property has 1,200 square meters. Comparable A has C or B. Comparable subject property has C or B. Quality of construction and finish is equal. So if we go to comparable B, the difference is sale price. The difference is sale price is 445 million, same location. Number of bedrooms is 4 bedrooms and 2 rooms BQ. Does it have swimming pool? Yes. Land area, the same 1,200 with the subject property. Does it have R of O? C of O? It's R of O. What of the quality of control, the quality of construction and finish is equal. Then we go to comparable C. Property was sold for 435 million Panama Crescent. How many bedrooms? 4 bedrooms. How many BQ? 2 rooms BQ. Does it have swimming pool? No. What is the land size? 1,200 square meters. Does it have C of O? Yes. And what of the quality of construction? It is below the subject property. Okay, now what we have done here is to adjust for this, adjust these elements. There could be so many elements, just like I've listed. I'm sure if you check the ones we have talked about, we have over 10, 15 elements. So you need to pick out one of these elements. But I simplified this so we won't be in a classroom taking them one after the other. So what we have done here is this. This only difference here, okay, let me go to the explanation, but the only difference here is that the land area of 1,300 is the only difference between comparable A and the subject property. So we have gone ahead to carry out market survey on the land value for this area, and it comes to 300 square meters, 300,000 naira per square meter, and that difference gives us like 30 million naira. So what that means is that we are now, this is the subject property in terms of land size is inferior value, I mean here, or lower rather, to the comparable A. So what we did here is to deduct that amount from the total sale price, from the total pre-sale price, so that we're able to come to a figure of 470 million naira. Now, if you go to comparable B, you will notice it's lower, and likely the reason it's lower is the R of O. Hello? Can I go on?
Yes, you can go on, we are here.
Okay, so the comparable B, you can see the amount is lower, and the reason why it's lower is because of the number of rooms and the fact that it's R of O. You remember, like I mentioned earlier, it's not that the amount is the exact amount. For R of O, for instance, is a qualitative factor. I have mentioned the quantitative factors and qualitative factors. The R of O is a qualitative factor. The land area, because it's in size and figures, is quantitative factor. So the difference in having R of O and C of O, for those of us in Abuja, I'm sure it's the same thing that is everywhere else. If you have an R of O today, even if the person tells you that C of O has been paid for, signed, once you don't have it written, it has an effect on the value. It definitely brings down the value of the property. So, and the value of the property is not just a reflection, or it's not just a certain figure, or the difference in amount you pay for between C of O, you pay for getting C of O from R of O. It doesn't work that way. The person telling you he can pay lower because of R of O is not asking you that he's going to pay the exact difference. Because there's a big difference that you're holding your C of O and you're holding your R of O. Then for comparable 3, the inferior thing here is that it does not have C of O. Sorry, comparable C does not have swimming pool, and it is below the quality of construction and the finish in the other comparables. So this is just an example of how you'll be able to do your computation. Remember, like I said earlier, there's no mathematical formula on this. It just requires your competence, your skills, your knowledge, and your experience for you to be able to do all this adjustment, because there's no mathematical formula on this. And it's not like we're saying it must be an exact figure that you're going to be deducting. In a comparable property, like I said earlier, if the comparable property is superior to the subject property which is being compared, then a negative or minus adjustment is made to take the comparable from that superior position down to an equal position, and then vice versa. In conclusion, I would be able to recount again all that we have said in this presentation. The discussion was on the use of market comparison method of valuation to carry out real estate valuation. The market comparison method of valuation estimates market value for a property using recent sale data from other similar properties. Emphasis, similar properties. The market comparison method of valuation process typically involves making adjustments because no two properties are exactly alike. We already discussed elements and factors of adjustments and the adjustment technique. The adjustment technique is the right Naira amount and steps to making the adjustment. We probably walk through a simple example showing how the market comparison method of valuation works. Thank you very much. Thank you for giving me this opportunity. Thank you.
Thank you very much. Here's the Kene Onwara. We let's wherever you have participants, let's give a warm round of applause to ESB Kene Onwara for doing justice to the topic. I'm very sure that in one way or the other, we will have been noting down some things in our jotters, or maybe the questions we are going to ask and all of that. But it has been very impactful. Thank you very much, ESB Kene Onwara, for this wonderful lecture.
Recording.
Now, before I go to the panelists, we'll take contribution from the panelists. But before I go to that, I want to quickly, while the lecture was going on, there are people who came in, members of the profession, senior members of the profession who came in. Everybody is senior. All of us are very important, but you know, we have to recognize our guys. So we recognize everybody. I will recognize everybody, but we must go take our recognition closer to our seniors and our guys in the profession. So I want to quickly, okay, Professor Tegulu came me at a point. I'm not sure whether he's still in. I'm not sure whether he's still in. Please. Okay, we'll check. If he's still here, we'll bring him to the panelists. Okay, we have ESB S.O. Jagun, the vice chairman of SVABON, he has been made part of the panelists already. We are going to take contribution from him. Thank you very much. We also have in the house, we have here in the room, ESB Soyin Agbalaya. We recognize you. Welcome to our webinar. We have ESB Shino Ganiyu. Welcome to our webinar. We have ESB Fatima Oluokuri. Welcome to our webinar. We have ESB Adeju Moke Akure. We have ESB. So we have so many seniors in the house. Please permit me, for the want of time, let's quickly go to the next item on the agenda. But I will see when I have. So let me quickly go to contribution from the panelists. I will still recognize more people when I have spare time. Okay, in the panelists, already we know our president is in. Let's have our president's contribution. The the numero uno of estate survey and valuation in Nigeria. Let's have your contribution, sir.
Are you aware I'm online too?
Okay. Okay. Okay, sorry. We also have in-house ESV Victor Adekunle Alunge. Sorry, I think I saw you at a point. Then okay. Sorry, yes. ESV Victor Alunge is the sponsor of this webinar. Like I said earlier, the webinar is in series. This is the third in the series. We did series 1 on 15th of March 2022. We did the second series on 5th April 2022, and this is the third series. So yes, Victor Alunge is the sponsor of the webinar. Before I go away from here, I want to also use this opportunity to encourage members of our profession, especially senior members of the profession. At any point in time, we've written letters out, send letters to people for sponsorship. We have so many topical issues that we can bring facilitators in for discussion, but we need people to partner with us in bringing this to members for free, so that, you know, knowledge is very fundamental to okay, so knowledge is very fundamental to the success, the sustenance of our profession. Okay, the president is not in now, so I will quickly go to the vice chairman of ESVAGO, ESV, Pastor S.O. Jagun. Your contribution, sir.
Good morning, noble colleagues, and good morning, Royals Academy. I must put on record once again that this is not my first time of joining your series, and your series have been very, very educative, both to the young and to the old. The knowledge sharing series is very germane for us to rub minds, and also to learn from our colleagues. The facilitator for today has done justice with very good examples in its location. And he says something that we need to hold on to, both for the young and for the old, which is getting comparables. What it means is that data is very important. Data is very important. There are times that we don't keep data at all. We need to keep data. Number one. Number two, we need to share data. That's an area where we are lacking. We are too secretive, because probably we don't want people to know that we are involved in a transaction or not. In the climes where these things started, I mean, these things are made public knowledge. They are published. Oh, so person took a lease, so person bought a thing, and you can easily work on them. So we should please assist one another to give data. It is very key. Let's give data as people ask. The institution, particularly the Lagos State branch, came up with very wonderful data before the COVID. I wish that it could be revisited so that we can have something to refer to. I mean, data bank where we can have market analysis of each area, each zone, that we can also use to compare with what we have. And I want to also appeal to us that, like the facilitator said, there's no hard and fast rule about adjusting our comparables with our subject. It takes experience. That's where the younger ones need to learn. It's unfortunate that these days, the young ones don't want to learn. They want to jump the gun. I mean, there are some of our old people now, by the time you tell them one or two things, based on experience, they can just give you what it may likely be. I'm going to find out 90% of the time or 95% of the time is going to be true. Why? Experience. Money cannot buy experience. Let's try to ensure that we seek time to acquire knowledge. When we acquire knowledge, market will pay for the knowledge that we have acquired. Unfortunately, we want the market to start paying us now. And by the time market now requires knowledge from us, most times we don't have it. And it's actually the knowledge we have that the market wants to pay for. So I want us to please take it easy, learn from the people, and also network. Networking is very key. Let's work together, particularly in the profession. Let's work with one heart. Once again, I want to say a big thank you to Race Academy for making this available. And please, I want to appeal to particularly the younger ones. Share the links. Let people know about it. I do. When I have the link, I share. I share to probationers. I share to everybody. You need to listen. You need to listen. You need to learn. And I believe that it's going to add so much to them in school or even in practice. Thank you very much, sir.
Thank you very much, SB Stephen Jagun, for your contribution. We appreciate it. We know you are a regular. You and our president, you are on the same cadre when it comes to attending trainings, especially that of Risk Academy. Thank you once again, and also thank you for the support you have been giving us at the level of the board. Thank you so much. Now, we go to the next, okay, I'm not too sure if Professor Tegulu is back, but let me quickly go to the next member of the panel. Here's the Dr. Samson Agbato. Dr. Agbato, please. Dr. Agbato. Okay.
Hello.
Okay. Hello, sir.
Good morning, sir. Good morning, noble colleagues. Yes, I'm sorry.
Sir?
I'm in a short meeting. I'm sorry, I lost track.
Okay. Okay, yes, you're a member of the panelists. We are inviting you to make your contribution or remark.
Thank you so much, Mr. President, sir. Our second vice, board members, and distinguished noble colleagues. I think our lecturer have done so much on this topic, and I must commend him for the extent he has gone. And I think I had, before I was called, or my attention was shifted, I had Pastor Jagu also. He also raised some fundamental things that will make comparison to work, and that is availability of information, market sharing. I'm also happy that the president is here, because these are an issue that has taken so many decades, but it has remained unresolved. I think it's high time the board and the institution should come and constitute maybe a research institute that will run continuously, where all this information will be aggregated. Having said that, the fundamental in adjusting is hinged on the judgment of the valuer. And that judgment can only be achieved by experience. How often the valuers have been involved in valuation. For some international standard, they normally say that for you to be able to compare effectively, you need between 3 to 5 properties. It means for us to say we want to make adjustments on the subject matter of our valuation, we must have 3 to 5 comparables. And in having that, I think ESB Honora specified it will not be far apart. But there are challenges that the location is far apart. So how do you make adjustment in that situation? In your adjustment, either to plus or to minus or to equate at the level of that property. So adjustment is about having eye for an eye and nose for nose. Of the program for enriching the knowledge of the professionals. Thank you, ladies and gentlemen.
Thank you very much, ESB Samson Agbato, for the contribution. So I want to bring in another member of the panel, and that's no other person than our Director of Studies, ESB Olalekan Aboderi, to give his contribution. ESB Olalekan Aboderi, please.
Okay. Good afternoon, noble colleagues. Our able president, the vice chairman of SFABON, our own ESV Pastor Jagun. He had always been encouraging us. We appreciate you. Our sponsor, ESV Victor Alonga, who had always been there and ready to support. Our resource person today, we appreciate you. That's why the short notice, you have really done well. Well, we don't expect anything less. And I want to start on other existing protocol, please. All senior colleagues here present, I appreciate each and every one of you. Our speaker today had actually gone far, and I want to believe, apart from all emphasis and explanations, he had given us some checklists. Like when we discussed, I told him, and I think in one of our promotion materials, I indicated that our lecture is not just like usual MCPD, it's for people to have tips, practical tips to go home with. And he has done wonderfully well to collate value-driven features, element of comparabilities. And well, that collation left us with an important aspect. He had shown us how to carry out analysis. Again, we could see from these analyses the implication of valuation being a science and be an art. Now, in his checklist, he is able to show that we have quantitative features and we have qualitative. I would have loved the situation if our respected Professor Otebulu is here. I want to put it to the academia, and I want to put it to the SFABON, who is in charge of the practice. And I'm happy that the second vice president is here, who is the sponsor of this program. And we have respected senior colleagues. We have a lot to do beyond, you see, data is central to our evaluation. But apart from data now, when talking about comparison, state of knowledge has come to give us about two models, at least, I think more than two, but I can conveniently mention two. One of it is the endonic analysis. The second one is grid analysis. Most of us that are not mathematically inclined as such, we can close our eyes on endonic, but we should not close our eyes on grid analysis. Most of us do research. You measure qualitative data. You do ranking or rating. And on the basis of that, we come up with indicative figure to represent whatever will be our conclusion. Grid analysis lend itself to this kind of rating and ranking. But however, when we have to, the first thing is let everybody go and study about grid analysis. I saw in one of the question charts that somebody is asking, do we have to show this to clients? I think I don't want to jump to that one. I will leave that to the resource person to answer before any contribution. But there are cases where clients, particularly end users of our reports, the auditors, for example, who they want to see your data, your calculation sheets. It's important to be able to show to them a process that is scientific, that will flow, that we have done it this way, we have done it this way. In the world today, endonic is there, Endonic relies on regression analysis, multiple regression analysis, or what we call that is what endonic does. And what it does is simple. Is what exactly ESV Honora did by identifying different area of comparison and making adjustments. But now making adjustments, you know, in using statistical tools. But when it is grid analysis, it's still statistical, but that is more or less like relative difference. When you are adjusting for relative difference. And in that case, you will be attaching difference of percentages. You have the ranking and the rating, and that will lead to your final value. But when you are to do that, where we need ESOBON, and where we need naives, and where we need people in academia, is for us to come up with a common basis, what I called assessment criteria. Like for example, ESV Honora had identified quite a list of elements of comparability, and equally mentioned that, well, the list is not exhaustive, but the list is good enough. It's a starting point. I would want to suggest that we should commission a committee, it may be ESFABON or whatever. Well, at the academy too, we'll look at that, if there is anything we can do. Let there be, let's come up with basis of assessment. For example, let me take you to implant and machinery, for example, under depreciation. You have various methods for calculating depreciation. But there is this approach now that they call observation. If you go to American Society of Appraiser, in their books, they always indicate when they say you can do depreciation with observation, they don't leave it in, they don't leave surveyors in limbo. They don't keep it to your subjective judgment strictly. Because what they do is, before you can say this asset is new, when an asset is new, they will state the conditions that the asset must fulfill before you can say this asset is new. And they will give you percentage of depreciation to attach to it, 0 to 5%. When you say it's good, they will state the criteria, conditions you must see before you can say this asset is good. And they state the percentage of depreciation. Like that and like that. It then means that if 2-3 surveyors will have to rate a particular plant and equipment under observation for depreciation, you are already guided. It will not be a question of one saying, no, this is very good. So it's therefore saying depreciation should not be more than 15%. And the other guy said, well, it's good. I think you should just take 30% off. That will introduce divergence in our opinion. So for comparability analysis, grid analysis, giving us the process of analyzing all these value-driven elements, all these elements of comparability. What we need to do is to now come up with basis of assessment, criteria. For example, all those features, Kamaldeen, you are interrupting, please. All those value-driven features have to be ranked. All of them will now accumulate to 100%. So we need to establish research to study people's perception, their behavior, what factors influence their decision in terms of purchase, what factor influence their decision in terms of value, so that we'll be able to rank all these value-driven comparability analysis and be able to rate them accordingly. It then means Olaleka Bordering Concern, for example, will be using the same basis. Why Ken Honora is using the same basis? Why Jagun is using the same basis? Of course, our divergence in our opinion of value will come down. So and there is nothing wrong for us to really go endonic, because we are in a sophisticated world today. So we must ensure that we move with the pace in our society so that we can render evaluation practice on the based on international best standard. In this case, please, my emphasis is that, in fact, if we cannot get data center now, we can commission research either through the people in academics, or you will be someone or nice put off a body, and let's come up with assessment criteria. When you are comparing properties, what are the assessment criteria and what are the ranking, so that our subjectivity will reduce, particularly while using grid analysis. And there is a quick reference point. Foundation Summit that was done, I think sometimes was it last year in Abuja or year before the last. I was there too. Somebody presented on grid analysis in that Foundation Summit. That's a good reference material. And we can equally get all these materials online for us to come up with processes to carry out these comparability assessments and be able to show a degree of scientific process in what we are doing. So follow up from here, please. We will want to leave this with ESV Jagun, Pastor Jagun, to please take our message to SFABON. Incidentally, we're happy that someone has registered this academy too as an external training center. So that's a good news for participants, and that's a good news for us because it means more money. Anyway, why we continue to impact. So, and for naives, please, let's look into that. There is nothing, if we're talking about data, there's nothing that should say up till now, we will not be able to surmount the problem of data center, data sharing. But what I'm asking for now in terms of coming up with criteria for assessment is not data. It's not something that will even be changing over 2, 3, 5 years. Maybe in 10 years, we might be reviewing it because people's behavior or conduct might have changed. Thank you so much. And I want to once again appreciate our resource person for the wonderful job that he has done. Thank you.
Thank you. Thank you very much. That was our Director of Study, ESB, Olalika Boderi. Thank you for your wonderful contribution to this topic. The next item on our agenda is to take message from our sponsor. But before I go there, let me quickly inform participants that kindly send your questions to the Q&A session. I can see some have already started sending theirs. Send your question. While all this going on, just send your question. All the questions will be treated. Thank you very much. So let me bring on board ESB Adekunle Alunge. Before I call him, I want to say something. When some of our engagements with ESB Adekunle Alunge on issue of training, retraining, and welfare, you see, he is one person that's always, he will find out, he will always want to know what we can do to help members of the profession, especially in the area of training. When we came up with different training topics and we decided to say, okay, for us alone, we cannot get this done. He quickly came and we got support from some other persons too. So thank you very much, ESB Alunge. So message from our sponsor, ESB Alunge, please.
Thank you very much. Sorry, can you hear me?
Loud and clear.
Thank you very much.
Yes.
My president, the vice chairman of the board, resourceful resource person, the organizers of this particular training, all the panel members, especially I want to acknowledge the tireless effort of ESV Olalika Boderi, the Director of Studies, for his love for imparting knowledge and helping to advance knowledge. Very distinguished fellows and members of this profession present. Good morning. I want to thank God that this particular training exercise has actually become a routine now, and people are actually acknowledging the importance of it and the knowledge that we are all actually sharing from it. And I want to particularly appreciate Rails Academy, right from the director of studies to the smallest person in that organization, for the wonderful job they are doing to make this happen. I want to acknowledge also that, yes, I'm proud to be a sponsor of the program, but those that are working behind the scene actually also sponsors in a way, because no amount of remuneration can compensate for your efforts. I'm really pleased that the medium has actually become a very, very useful avenue for sharing and acquiring knowledge on various areas of our profession. And that's why I'm pleased to sponsor this series and also even many others. Knowledge acquisition is key in our profession because what we sell is knowledge. And we need to understand that we need to have, we need to be ahead of our clients to be able to earn our fees. And in this day of, where internet is accessible to everybody and information on every aspect of our lives is on the internet. If we don't know more than our clients, then we will struggle to actually justify them paying us. So that's why we must keep abreast and always ensure that we acquire more knowledge. But one thing that the second leg of this effort, you see, knowledge acquisition is good, but the point is knowledge acquired without opportunity to actually put it into practice is almost, useless. So as we acquire the knowledge, our next focus should be opportunities that we need to enable us put into practice the knowledge that we are acquiring. And that is where, our practice opportunities will have to come in. So as we are acquiring knowledge, we need to look at how we can create that opportunities. And that is where the profession actually needs to come in. And I also want to acknowledge that the resource person has done a good job. Honestly, I'm really proud of what he has done today. But I want to also latch on to the closing submission of ESV Aboderi, which, in terms of my own understanding, talks about having a sort of standardization, because in the market, adjustment, analysis and adjustment in valuation cannot be individualized. There has to be a standard, a scientific process by which, all participants, all professionals will actually be approaching such a very, very delicate and very important aspect of our professional engagement. Otherwise, we will leave everything to arbitrariness and individual whims and caprices. And that is actually going to result in, will actually threaten the integrity of, our practice and price, what I call price stroke value formation system. I want to remind us that our investment valuation, technique and even process utilizes what we all know as rent in arrears. If we are carrying out a valuation, we assume that our rent, the income from the property, is actually received in arrears. But in actual sense, our rents income from properties are received in advance. But despite the fact that there is a misalignment in our assumption in terms of when we receive income from our property, our valuation is still credible. Why is that? It is because everybody is doing the same thing, and therefore the possibility of actually having, violent, differences and so on is removed. So the point is, it would have been different if in our market, some of us are valuing based on rent in arrears, while some are valuing based on rent in advance. That would have been chaotic. That wouldn't have helped us at all. The same thing when it comes to analysis and adjustment for valuation purposes. If we are doing things individually and without a common standard, a scientific approach to it that everybody will be following, it will also create problem for us. So this is where the profession needs to stand up. What we have had today is a wake-up call, and I think arising from this, I will expect Real Academy to actually make available contributions and whatever to the institution and to the board, so that we can actually start looking at this aspect and coming up with a standard format for practitioners to actually follow. I think it's not going to be that the institution or the board will just decree. I think we need to now have engagement. We need to have contribution. We need to have views from academia, from practitioners, so that we can come up with a robust approach to actually meeting these objectives. So I think it's been a very, very useful session, and I want to commend the organizers, and I also want to commend the resource person for the opportunity. Once again, I'm proud to be a sponsor, and you can always count on me when it comes to advancing knowledge and helping our colleagues to acquire knowledge. But I think the next phase should be, now let us focus on how we create the market, the opportunity for this knowledge to be practiced. Thank you very much for the opportunity. I wish you all the best.
Yeah, thank you very much, SV Victor Adekunle Alunge. Yes, we've taken the charge you give to us in respect of coming up with you can count on us that we are going to make efforts, and at any point in time when we need when we need your support, we'll surely come to you. Once again, let me use this medium again to encourage our senior colleagues in the profession that at any point in time, we've written some letters out for sponsorship we have so many topical issues that we know will help practitioners in the practice of the profession that we have penciled down. We are going to be sending letters out to identify sponsors for those who have not sent to. Please try as much as possible to support our programs. Thank you very much. Then, while we started this panelist session, okay, we were supposed to start with our president, but at that point in time, he was not in. Now, I called him there. I think he went out briefly. So let me take our president's contribution now. Mr. President, sir.
Thank you very much. Thank you. If the first vice president is here, the first vice president, second vice president, the vice chairman of the board, our powerful lecturer, Keno Honora, and the director of studies of Risk Academy. Noble colleagues, good afternoon. It's just still money, sorry. Let me say that one of the things that we were unable to do for these past 2 years is the promise we made to our members that we shall actually see how we can try as much as possible to generate and transmit data for the use of our members. And based on that, we actually look at people in academia and make sure that they are the people that we have in the research and development committee of the institution. Unfortunately, when Lagos State submitted their proposals for rental values and other sales value in Lagos State, we sent them to the research and development. They analyzed it and also advised the council on what to do, which we did. And there and then we mandated them that they have to step up the game from what Lagos State has done by doing similar thing in other cities, so that we'll be able to have comparable data for our members. And I did tell the committee that one of the sources of our revenue for this tenure will be the sale of data to our members, that before you will be able to use some of this data, you have to pay a token so that we'll be able to recover our overhead costs on those, because we know that data is expensive to generate. But unfortunately, we're unable to do that. I want to believe that our successors will continue in that line by making our members to be open in whatever transactions they have. You not be open to the owners or clients that you are transacting with. But for that information that will help us in our function and our practice, we should do our. So let me also, it is very important that we able leadership of the second vice supervises those faculty under the first vice. We are trying to see how the faculties can be able to have operational manuals. This will help anybody that is going to carry out valuation. These are the things we are expected to do in that kind of valuation. Just like the lecturer told us this afternoon, he's been able to give us both the quantitative and the qualitative analysis of what we should do when we are using market comparables in our valuation. These are the things that by the time you get it, you now know that you are going to carry out evaluation. These are the things that you're expected to do, and these are the things that your client is expected to do and wants to get this information before you even start. So if you're not prepared to defend what you have done, it becomes a problem. There is no need for you to hide your data. It's in those days that you finish your evaluation, you keep your evaluation sheet in your office. Now the client wants to see how did you arrive at this particular value. You should be able to defend it, and most times they might not even call you. What to speak for you is your report. Now, if you give them all the information about your comparables, you give them information about the property you are valuing, they don't need to call you because you submitted your report. Your report will speak for you. So I think that our members should be open, and we should learn more of these international best practices that will help us. On the suggestion made by the Director of Studies to Ezabon, we are already working with Ezabon on some of all these operational manuals, because like on and I use two of the same point. Without the Ezabon, Naif will not be able to, and want to commend the present board and the present ESCO of Naif. We have been working together in harmony. Whatever thing we want the board to do for us, we discuss, and most times they accept. And there are things they will also tell us, go back and correct this and come back. And it has been a very good working relationship with the board. So I'm happy that the vice chairman is here and the second vice president is here. Even though me, I might be buying out, but at least as the immediate past president, the Constitution also gives me power to be a member of council. So I'm sure that some of all these things that people have commented, people have observed, we will take it back to the council and to the board and see how we'll be able to help our practice, especially the young ones. And it's an opportunity for the young ones actually to train and retrain, because the bulk is on their side now. Most of our seniors are already retiring from practice. So it is them that will actually rely on some of all this new technology and new way of practice. So on that note, I want to again congratulate RIS Academy, first of all, for being registered by Ezabon as an external study center. And also thank you for what you have done. Let me congratulate Kene Honora for such a wonderful practical job that he didn't just talk about comparison, he didn't just talk about academia. No, I think he went practical. And these are the kind of things we want to give to our members so that people will be ready to face the real practice that we have. Thank you very much, and I wish you a very successful and blissful day.
Thank you very much, my president. We have always been having this from you, and you say it and you do it, and that is the hallmark of your administration. Thank you very much for your contribution. As much as possible, we have noted areas where we can also add one or two things to what we are doing now, and by the grace of God, we are also going to be contacting you even privately on some of these things. Thank you very much. While the president was making his contribution on the attendees participant portion, I saw our past president, ESB Emeka Onuora, and we have tried to add him to the panelists. It's not, he has not been able to join the panelists. So we recognize you, sir. Thank you for attending the webinar. But if you can join the panelists, we want to have a word from you. Okay, while we are doing that, I also want to recognize ESB Ozili. ESB Ozili is also a senior member of the profession. He's also on the participants side. We've made effort to send the invite to him to join the panelists, but he has not been able to accept that. We recognize you. Thank you very much. We have ESB Bashir Rahim and ESB Mutiu Balogun and so many others. Everybody is very important to us. Everybody is important. We are all noble colleagues. But if we want to start mentioning all names here today, we won't leave here and have just a few minutes to go. Now, I want to quickly go to question and answer session. Okay, question and answer session. Some people have typed in their question. Maybe I should start taking one after the other. Why I expect more people to also do so. The first question I have here is the questionnaire said, "Good morning, sir. Thank you for your lecture. My question is this: what is your view in value correlation? Is it proper in valuation?" ESB Kene Honora, are you okay?
Yes, I'm here.
Okay, let me take the question again.
Yes.
What is your view in value correlation? Is it proper in valuation? So let's take that. I will go to the next when you are. Or do you want me to go through the ones that are available now so that you, in case we have some that?
Yeah, I think you should. I think you should say all of them.
Okay. So that some may just require the same answer. Okay. The next one is, in making adjustment. This is question from Adebola Adeyemo. In making adjustment based on comparable sales method, how will the client appreciate these adjustments since our valuation calculations are not given to them? Should these peculiar adjustments be spelled out in the valuation reports? Okay. The next one is saying, okay, this person is asking whether he can get the webinar presentation, including the previous. Yes, I can assure you that for those who attended the previous ones, immediately after the webinar, we sent to the material to them via the email with which they registered. Okay, but if you want it, you can call the number on the flyer so that we can get those previous ones. But for today's own, everybody who participated will get it in their email. Okay, then in the case where, question from Tunde Allen, in the case where you are using a market listing as your comparable, what percentage can you apply to adjust for negotiation? Then we also have a question from Adeyinka Ajibade. This is a job word, okay? Okay, now he's asking whether you can get the material. Yes, you can get the material after the webinar. Then we also have Mrs. Okay, Eniola Balogun. Thank you so much, Eric. I'm looking for your. Okay. She's also asking for the material. Thank you, Mrs. Eniola Balogun. Okay, so far in the question and answer session, this is what we have. I don't know, should I go to chat and see if we have anything? Okay, I think, yes, Banora, you can start answering the questions the ones I've read. Let me go to the chat if I can get any question there. Thank you, sir.
Okay, thank you very much. The question one is on value correlation. I think if I understand that question clearly, he may be talking about how we can use two variables to arrive at a figure or arrive at an indication of value. If that's what he means, yes, it is possible to use more than one variable to arrive at an indication of value. The only thing what that means really is just for you to have adequate data, so you will know when the values are far apart or wide apart. I think that's that concerning question one. Then question two asks, can you show your clients how you arrive at your figure? For me, I'm a proponent of that, really. In fact, it gives me joy when a client wants to know my figures and how I arrived at the figures. Because what that means is that I have got my data. Day in, day out, we defend valuations. And what I tell people is, anytime you're carrying out any assignment on valuation, two things in your mind. Do an extensive valuation, because you could be called, do an extensive market survey and work with adequate data and have adequate data. So one, because you could be called to defend your value. Two, have it in the back of your mind that that document may end up in the court. So if you have these two in mind, why wouldn't you be comfortable enough to show it to your client? What if the value eventually gets to court? Will you say, no, you won't present it in court? So what that means is, like I said earlier, we must have enough data. Once you do not have adequate data and you have not carried out a proper market survey, then that's when you'll be scared of sharing how you arrived at your value. Today, a lot of our colleagues believe that the quantity surveyor will provide you information on construction rate for regular valuation of a 4-bedroom or 3-bedroom duplex. But what I tell colleagues is, you do facility management, you do property management. If you construct a fence wall today, keep your data. What is the length? What is the height? How many blocks? What quantity of cement? What quantity of sand? It forms a data per linear meter. If you do painting of a property today, take your measurements, keep your data. These are the things that when you're working and a client says, I want to see your figure, you will happily, very happily show to the person, because you already have this data, you have this information. And if you're able to show a client this, I bet you he'll be more comfortable, he'll be more assured wanting to do business with you. The only thing he will want to do is to argue with you that he feels is, and my response has always been, okay, if you give somebody 10 million naira to do XY job, you medicate the person 10 million naira. The person may have used part of it to solve his family problems. But if I have my data and I'm presenting it to you, I'm able to sit in front of you and tell you that cement costs this amount, labor cost is this amount, Nigerian tile is this, Royal Ceramic is this, India granite is this figure. By the time you're able to reel out all of this, your clients will know that you know what you're doing and what you're talking about. So he will even be more comfortable dealing with you. So I'm a proponent of let your clients see how you arrived at your figure. And when you're sure of your figure, you won't have problem with that. Then the third question is from Tunde Allen. In the case where you are using a market listing as your compare, what percentage can you apply to adjust? First and foremost, market listing is not what you can use for comparable, where you have comparables. But where it is market listings, in my presentation, I mentioned it, is either you act, we've done it several times, is either we act as the buyer. If you see your listing, we act as the buyer. Go ahead and negotiate. In fact, we are doing an evaluation today where somebody has given us a cost of weight bridge. And what we did simply was, we took the numbers of the company that is manufacturing the weight bridge and requested that we want the same weight bridge. We just took all the data, all the information, all the specification, and we went ahead to negotiate with this person. Meanwhile, it's the same company that the person has given us a cost. And after negotiating, hard negotiation, and that we actually want to do this, we even show the person a space where we want to do this. And we're able to get a figure we can work with. So at times I tell colleagues, pose as the buyer. Nothing stops you from calling one of your friends, check out that property, see that property, negotiate as if you want to buy. Then you can go ahead to ask questions like, if it's something, the one you cannot pose as a buyer, you go ahead and ask questions like, okay, how long has this property been on the market? If it tells you 1 year, you're already in your mind relaying what your adjustments could be like. What is the best rate have you got on this? He tells you 10 million naira. What is the best rate you have got on this? He tells you 8 million naira. Or how much does the person want to sell? He tells you 10 million naira. What is the best deal you got on this? He tells you 8 million naira. And you tell him questions you can ask from experience. What if I offer you 6 million and I'm ready to pay now? Can you hook me up with the owner? Are we ready to discuss? The kind of responses you get from that person will guide you on what that property can actually go for. The responses on how long it's been on the market, the responses on the best you can get on that, responses on even negotiating directly with the owner of that property, it will guide you. If all that fails, that is when you now begin to do an adjustment at a certain percentage. But there is nothing here written in any books that you must do XYZ percentage or X percentage. It's totally dependent on your skills, on your knowledge, on your competence of that local market. Emphasis on the local market. There are street agents that will give you better information on that local market. So why are you not working with them? Because they are not a state surveyor does not mean you cannot go to that local market to get all the information you need. Thank you very much. I think that was the 3 questions.
Yes, thank you very much, ESB Kene Onora. Yes, I also have a question here from Kayode. Said in the grid analysis, the data of transaction was not mentioned. In the grid analysis, sorry, the date of transaction, not data. The date of transaction was not mentioned. Okay. Then let me add this too. I think I have, okay, I have one other one here from Uchina Easy. How do one choose comparables in an area or location where sales is very minimal, where evidence of sales is very minimal? So it wants to know, how do you choose comparables? Thank you.
Okay, in my example, I didn't state date of transaction, but I mentioned it. If the person had listened, what I said then was that those sales were done within 6 months. 6 months, 8 months in our current setting, it's allowable and you can work with that. But just like a lot of us are busy not getting data and getting information and storing data. I'm sure if we live here believing and trusting that any property you see listed that goes off the market, you must enlist it, you must include it and draw up your data for that. It will work very well for all of us. So I had mentioned between 6 months, 8 months, that's when those transactions were sold. And I had mentioned date of transaction too as element of adjustment, and date of transactions should not be too far from the date of the inspection and valuation. Then the other question was comparable where evidence of sale is limited or is minimal. Yes, it's part of what I had mentioned in the presentation. What you can use as comparable is a minimum of 3 properties. Then where in a situation where it's just 1 property, you can't actually use that as comparable. So the only thing you may have to do, experience and data collection are the only thing that will be able to solve all of this. So the only thing you'll be able to do in this situation is to search for more information, for more comparables. Then where that fails, you may have to work with minimal. But if you remember, in my presentation, I talked about liquid market, vibrant market. Where you don't have a vibrant market in a certain neighborhood, it affects the quality of your valuation. The way you know it's a neighborhood where, for instance, you go to Guzape today, you see 4-bedroom terrace duplex. So if you want to do valuation of 4-bedroom terrace duplex, it's everywhere in Guzape, and it's a vibrant and liquid market for it. So you can get that information. The way you don't have that convenience or that adequate information, then you may have to work with that single property. But your skill, your competence, your knowledge will really come to play here. Because comparing with just 1 property is almost an impossible task that will give you an error-free value. Thank you.
Thank you so much. Yes, we can Onora. I have Ihanyi Nudiri Alaka. Sorry if I didn't pronounce that name well. Your question, I think I've answered your question that you get the presentation. I think for now, this is all the questions we have. While the question and answer session was going on, our president took permission to leave us for another engagement. We thank him for attending. Then we also saw in the chat room a message from ESB Tony Agbalaya asking for account number to contribute to the academy. Thank you very much, ESB Agbalaya. We are going to reach out to you privately for the account number. Thank you very much. Then, okay. Now, in the absence of any other question, because our time is fast spent, I want to bring this webinar to a close, but not before thanking our facilitator for the day, all our panelists, all noble colleagues who have made it a point of duty to attend today's webinar, our sponsor and everybody that have contributed to the success of this program. We thank you very much for attending. We do hope that in subsequent ones we are going to be organizing, you will also oblige us your time so that we can all learn together and do the right thing together and make money together. Thank you very much and enjoy the rest of your day.
Thank you everyone.
Thank you, yes, we can, Honora. We are very grateful. Thank you, everyone.
Thank you very much.
Yeah.
Thank you. Have a nice day, Kenneth. Wonderful. God bless
Thank you so much, everyone. Our resource person, thank you. We appreciate you.
Thank you very much, sir.
I wish you the best. Thanks. And regards to each and every participant.
Thank you for the opportunity.
Thank you very much, everybody. Have a wonderful time. Thanks so much.
Thank you very much. Thank you for attending.
God bless you.
Amen. Thank you for attending.
No problem.
Thank you, everybody. We are grateful.
Welcome. Anytime.
And we know you oblige us your time. Thank you very much. And we also thank our sponsor once again for his regularity in sponsoring programs of Race Academy. We cannot forget 2018. We cannot forget 2018 when he single-handedly sponsored our workshop on valuation of trade properties. It was very impactful, and the knowledge gained was still useful, or it has been useful since then, and it's still very useful today. Thank you very much.
My pleasure.
And like you said earlier, this is the third in the series of this webinar that has been sponsored by ISB Alonge. We still have other series. We have 3 other series coming up. We are going to notify you when the next is going to come up. Thank you very much, ISB Alonge. Thank you all panelists. Thank you all noble colleagues. We are very, very grateful. Thank you, ISB Tony Agbalaya, for that, for the love shown to contribute to this good work. Thank you very much and goodbye.
Thank you.